With earnings dominating the headlines and big data drops on the horizon, we're breaking down what really matters, from home sales to Fed moves. Let's get into it. Welcome back to Navalier Market Buzz. Earnings are stealing the spotlight this week, but there's more on the calendar than just quarterly results. Let's zoom out a little bit. Dad, beyond earnings, we've got key economic indicators coming up. What are your expectations for existing home sales and durable goods orders?
Well, to be honest with you, home sales and housing starts are a big deal because they're very soft. They are discounting home prices everywhere. Even here in South Florida, where I am, which is really hot, they have to discount homes to sell them. So the Fed has to cut rates. I mean, this is just what happens when rates get too high and all the buyers disappear. So I'm actually very worried about a lot of the home builders' earnings. So I would add that Governor Waller did go on Bloomberg and call for a rate cut. And so that's good. It means there's a growing minority that wants to cut rates in July. So hopefully we'll get that. But durable goods should be very good. We had very strong auto sales and retail sales report. People are still out buying vehicles. So I'm expecting a very positive durable goods report. Also, we've had a lot of aircraft orders for Boeing.
Looking back for a second, the CPI and PPI numbers dropped last week. What's your take on the inflation trend?
It's the fifth month in a row that inflation keeps coming in below expectations. You know, all the consumer inflation were two things. Owner's equivalent rent, which is up at 0.2%. That's called the shelter costs, and higher gas prices. Gas prices rose. And also there were higher electricity bills because of the heat wave. So if we back all that out, there is no inflation on the consumer level. The PPI was even better. It was flat as a pancake, okay? So we were honored that President Trump broadcasted my little visit on Fox Business with Maria on the CPI as it was coming out. And so we were on True Social talking about that. And then, of course, on True Social, he just laid it all out. Hey, there is no inflation. And he's right. Now, service costs actually fell in the wholesale report. And goods prices rose 0.3%. But there's deflation. And we're importing deflation. And it's as simple as that.
Now let's get back to earnings. We're coming off of a strong start to the Q2 season. What names or sectors are you watching most closely this week?
The strength is still in the semis, led by anything affiliated with NVIDIA. So it's essentially NVIDIA, Supermicro, and all the data center related stocks. His leadership has been intact for the last few weeks. Before that, it was all quantum computing, although those stocks are still doing well. And anything that earns money that can beat and guide higher. And, I'm really looking forward to the semis reasserting their leadership.
But I do have to ask, Dad, is the bear in our driveway a bad omen?
No. We have that bear all the time. And if we don't have that bear, we have other bears. So what it is, there's an apple tree that he likes. And the deer got all the peaches, so they're gone. But I don't know if you remember, we used to have a big cherry tree in the driveway. So the deer would stand on their hind legs eating the cherry. And last year, the bear really got mad. He couldn't get up as high as the deer. So he actually snapped the cherry tree in half.
How is it going?
And we cut it down.
Now let's talk about some stocks that are reporting this week. Let's do a quick fire breakdown. Let's start out with the fast food and consumer index.
Sure. Domino's, their sales are supposed to be at 4%. Their earnings are supposed to decline 1.5%. The analyst estimates are pretty steady for the stock, and they did have a decent surprise last quarter. Everybody likes pizza. I think Domino's has the cheese in the crust. I suspect they'll beat. Chipotle. Well, what can we say about Chipotle? Other than you've been known to go there. Sales are up 4.7%. That's the forecast. Earnings are forecast to decline 4.3%. That's unusual. Analysts have just trimmed their estimates from 36 cents to 33 in the last 3 months. But this stock has a very good earnings price history, so I think it'll be okay. Their biggest issue is Kava's trying to compete with them on essentially the same model. But, if you want your guacamole, that's where you got to go. So I expect Chipotle to beat. Coca-Cola is in the news because one of their best customers, namely President Trump, demanded that they start putting cane sugar back in the Coke. So if you go drink a Coke in Latin America, it tastes a lot better than an American Coke, which is sweetened with corn fructose. So despite that presidential order and the company admitting they'll start using cane sugar again, it's not going to affect their bottom line for this last quarter. So the situation with Coke is their sales are supposed to grow about 2%. Earnings are supposed to decline 0.3%. Analysts have held very steady for the last 2 months, and they tend to eke out an earnings surprise. I would worry more about currency risk, but we've had a weaker dollar this year, and so that should be feeding their bottom.
Now let's switch over to autos and manufacturing. What do you expect for GM?
Well, this is a big one. I think GM's on a roll, to be candid with you. They're selling a lot more of their electric vehicles than anybody thought. The Cadillac electric Escalade is massive. Every time I walk by one, I'm shocked by the size of it. It's essentially an electrified Hummer, but it's bigger. And they make a ton of money on their trucks. And, of course, they're onshoring to America, diverting a lot of their production from Mexico back to America. With that said, their sales are supposed to drop 4.4% globally. Earnings are supposed to decline 21.9%. But, the analyst community has been very cautious on this company. They have trimmed their estimates, I think, largely due to the onshoring, which costs them a bit. But they always surprise. I'm looking at GM's surprises the last 4 quarters, and they're very impressive. So I do expect GM to eke out a surprise. PACCAR is a trucking company, and their earnings, unfortunately, are supposed to decline 14.9%, and their earnings are supposed to decline 38.3%. They've had some pretty severe analyst cuts in the last 90 days, and they have missed in the last 2 quarters. So this company's having a hard time. It's a great company, but people aren't ordering the trucks. Now, the new tax bill might stimulate orders, so that would help a lot because you can have accelerated depreciation. But we will not see it in the second quarter. D.R. Horton is a home builder, and their sales are supposed to decline 11.7%. Their earnings are supposed to decline 29%. But although the analysts cut estimates in the past 90 days, I noticed in the past 60 days are pretty steady. But they did have a miss last quarter. So this is an example of one of the home builders that's discounting homes to sell them that might show up in their bottom line. And so I'm not confident they're going to beat.
Now, defense stocks are in focus. What do you think for RTX?
Well, that's Raytheon, of course. And Raytheon is, how do I say it in a nice way? They dominate the federal government, and their sales are supposed to be up 4.5%. Their earnings are supposed to be up 1.7%. The analyst community has been very steady with their estimates, so they should beat. Again, they're embedded in our Defense Department, and they got very consistent business. They also make a lot of equipment for plane cockpits and things like that. Lockheed Martin is another stock, for lack of a better word, embedded with the federal government, and a lot of people don't know that Lockheed is a huge IT company for the government. So their sales are supposed to be up 2.5%. Their earnings are supposed to decline 7.5%. Pretty steady analyst estimates in the past 60 days. Slight trim in the last 90 days. But this stock has a much better earnings surprise history. And the last 2 quarters, they've had big surprises. So I would not be surprised if they eked out another surprise. Okay, so Northrop Grumman, again, another big U.S. defense contractor. Their sales are supposed to decline 0.8%. Earnings are supposed to be up 5%. Similar to Lockheed and Raytheon, their analysts have been very steady on the stock for the last 60 days, but there's a cut in the last 90 days, and they did miss big time last quarter. But they are really impacted by the fighter jets and things like that. So we'll see how they're doing. The fighter jets aren't always up and running.
Now, tech heavyweights are stepping up. What do you think for Tesla?
Oh, Tesla, I'm a little worried about them because, Elon's been on the warpath and, reshuffling all the management of at least the car company. So obviously they're still the most popular car in America, so they're a success. And they can make them cheaper than everybody else, and they still have the tax credits, the $7,500 tax credits through September 30th. But after that, they disappear. So their sales are supposed to decline 11%. Their earnings are supposed to decline 15.7%. So this company is going to be all about its guidance, okay? And the analyst community has turned very cautious on Tesla. They've cut estimates in the last 3 months, just so you know, from 64 cents to 44 cents. The last 2 months has been pretty steady, but boy, they've missed 3 of the last 4 quarters. So if I was Elon Musk, I'd be talking about my energy storage business, which should be booming, especially in light of the huge fire in Moss Landing in the Monterey area. All those batteries have to be replaced. I do not know if Tesla has a contract for that. Hopefully they do. But their Powerwall business is doing very, very good. And of course, he's got to provide guidance on the Optimus robot. And we've had all these guests on, Adam Johnson and Luke Langone, and they're all excited about the robot. Hopefully, he provides some guidance on that. And of course, finally, the robo-taxis. The robo-taxis are up and running. A little late, but they're up and running. They're going to face increasing competition, not only from Waymo, but also Uber. Because Uber not only has the big deal with Volkswagen, they announced another deal with another company recently. So robo-taxis are going to become increasingly common out there. And if Tesla can capture good market share and become the market leader, that would be very good. You know, Google is an enigma. They do not provide guidance, but they seem to always beat. Now, they have this one little glitch. The Federal Trade Commission won a ruling to split them up, and I have no idea what's going on with that. I should, I guess, but, you know, that ruling to split their search engine away from the company is kind of like a dog catching a car. How do you do this, okay? And so I think the government's been struggling with that. I use Google Chrome. I haven't seen any changes, okay, to my computer. And so, but their sales are supposed to be up 10.8%. Their earnings are supposed to be up 15.2%. The analysts have not changed estimates for the last 90 days. And last quarter, their earnings surprise was 39.7, and they have a good surprise history. So, and I think you'll see their ad revenues up considerably because people are still clicking a lot. We saw that in the retail sales report. Okay, ServiceNow is a very established company. It's their software is used in a lot of enterprises. Sales are supposed to be up 18.9%. Earnings are supposed to be up 13.9%. The analyst estimates are pretty darn steady. No changes in the last 60 days. One slight trim in the last 90 days. But they have a good surprise history, and I do expect them to surprise.
Now let's finish off with a couple more stocks that are reporting this week. What do you expect for NXPI?
NXPI is a semiconductor, and unfortunately, it's one of the weaker ones. Their sales are supposed to decline 7.3%. Earnings are supposed to be up 16.7%. The analyst community really hasn't changed their estimates for this stock much, and they typically eke out a tiny earnings surprise. So it'll probably surprise again, but this is not one of the strong semiconductors out there. EQT Corporation, their sales are forecasted to soar 86.6%. Their earnings are even stronger. They're supposed to explode 627.7%. And despite all that, the analysts trimmed their estimates in the last 3 months, but there's a slight positive revision the last 6 months. So something's going on, and they do have a huge earnings surprise history. So this should be one of the bigger surprises out there if history repeats. Okay, Boston Scientific is actually in our managed accounts, and we recommend our newsletter. Their sales are supposed to be up 18.8%. Their earnings are supposed to be up 16.9%. The analyst community has actually revised their estimates higher in the last 90 days, and it has a great earnings surprise history. This company makes stents and a lot of cardiovascular devices, and obviously that business is good. We have an aging demographic, and so that's benefiting their business. Okay, Lamb & Weston, for disclosure, your mom owns it in one of her personal accounts. We no longer have this stock under management. We did when there was a potato shortage. This is the French fry company. So if you go to the grocery store and you see at the frozen French fry section a picture of Idaho, that's them. And their sales are forecast to decline 1.3%. Earnings are supposed to be up 18.2%. And with that said, the analysts have trimmed estimates in the last 90 days. But last quarter, they had a 26.7% surprise. I'm personally very curious about this company because I just need to get a better feel for how the potato industry is. I don't know what caused the shortage in the past, and hopefully all that's been alleviated, and I really need some guidance on that. But this company is a mini monopoly if you want to invest in French fries. Okay, Southwest Airlines. Well, I fly them a lot, so I know them very well. Sales are supposed to decline 0.7%. Earnings are supposed to decline 9.8%. There are analyst cuts in the last 90 days, but in the last 60 days, it looks pretty steady. This company has a great earnings surprise history, very strong. Anywhere from 14% to over 200% earnings surprises. So I think they'll beat again, largely because their capacity on their planes is very good. They're very monopolistic on their routes. When they do get competition, sometimes they abandon it. I've seen them abandon routes when Allegiant or Spirit moves in. And, of course, they're supposed to buy Spirit. That's another issue. But they're also very good with their fuel costs. Fuel costs are down. And so that should help Southwest. Blackstone. What can I say about Blackstone? Well, first of all, they're sucking up to President Trump. They're investing now in data centers. This is a big real estate related company. They're also involved in private credit, a huge Wall Street firm distributing all kinds of products to financial advisors and investors. Their sales are supposed to be up 10.2%. The earnings are supposed to be up 13%. The analyst estimates have been trimmed in the last 60 days, so they've been reeled in, but they do surprise. So I'm going to expect them to surprise again. Mutual Realty Trust basically is investing in data centers. So if you want to invest in data centers and get a nice dividend yield, here's your option. Their sales are supposed to be up 6.5%. Earnings are supposed to be up 15.3%. The analyst community has aggressively revised their estimates higher from 20 cents 90 days ago to 31 cents recently. Huge surprises. This company had a 59% surprise last quarter. So this should be riding the data center boom and should post another nice surprise. Phillips 66 is obviously a oil refiner. It's funny, the margins on refining oscillate a lot. A lot of it has to do with the weather. We are in the summer months now, though, where they should be doing a little bit better. But with that said, their sales are forecast to decline 17.5%. Earnings are forecast to decline 24.2%. Analysts have trimmed their estimates pretty aggressively in not only the last 90 days, even in the last month. And they did have a big miss last quarter. So I don't have high expectations for it. But again, refinery margins are all over the place. And there's been a problem in California because California only wants green diesel, and a lot of these companies make diesel they can't sell and have been abandoning California. So we shall see what happens, but this one's more of a wild card. But, I really want to see their guidance because refiners tend to make more money in the spring and the winter, and that's just because they get to change their fuel blends and prices can go up.
Let's end on some subscriber questions. One of our subscribers wanted to know what's happening with SMCI.
It's improving steadily with NVIDIA. Obviously, as earnings season gears up, NVIDIA is the bellwether for the market. I like to say instead of having a Magnificent 7, we have a Magnificent 1. And Supermicro makes the best water-cooled rack systems out there for the cloud centers. And we will have an expert on that knows all about that business. He's an AI expert as well. And he can reiterate that. But Supermicro's got its mojo back. So hang on.
Root stock was an A in stock grader and now B. How do you deal with this seemingly dilemma?
Well, I really don't. First of all, I respect Tradesmith very much. I put all my stocks in the Tradesmith system. Root is not a stock I recommend, but it is, of course, our stock grader, as our 6,000 plus other stocks. Their sales are forecasted to go up 20.5%. Their earnings are supposed to be up 130.9%. And they have a big positive analyst revision. This is an interesting company because 90 days ago, the analysts thought that this company would lose 39 cents a share. Now they think they're going to earn 15 cents a share. That's a big turnaround. And anytime a stock goes from negative to positive earnings, it can be explosive. And this company's earnings surprises have been beyond explosive. I'll just read a couple off to you. 2 quarters ago, 509% earnings surprise. Previous quarter, 1,467% earnings surprise. So I think you're grabbing a tiger by the tail. Any downgrade and tradesmith system was probably technically related from buying pressure. But what I see here fundamentally with analyst revisions and the good surprise history and positive sales and earnings coming, this stock should be fine. So if you're a long-term investor, there's no reason not to hold the stock. Also, I would notice the last 7 days, analysts revised their estimates from 10 cents to 15 cents. That's a big upward revision. This stock should get its mojo back, and it finished pretty strong here as I'm looking at it.
So if the Fed's stated goal is 2% inflation, why would they cut rates if the inflation rate is 2.4?
Because if you look at in the last 3 months, 6 months, it's a lot lower. Also, we have a minority of Fed officials that have, like Governor Waller, who went on Bloomberg calling for rate cuts. Furthermore, there is a global interest rate collapse underway. Japan has very low rates. China's rates are below Japan, and China may have to devalue its currency because it can't cut rates further. The Bank of England, one of their governors, recently said they're going to have 3 more cuts. The ECB's cut 8 times. So as you look around the world, rates are at or near zero in a lot of countries, and if they're not there yet, they'll be there soon. The whole world has experienced a horrific demographic decline. They didn't have enough kids. This is very prevalent in Asia and especially Northern Europe. You can't grow an economy when you have shrinking households. So there are rate cuts everywhere, and if I'm an international investor, I can come to America. I don't have the demographic problem. Our country also assimilates immigrants. So even if as we get older, we can bring in more immigrants. Of course, Trump just wants them to have green cards and be legal. And we have just a better economy. We have 50 states competing with each other for business. So this onshoring that's going on is real. I do expect, and the dollar is getting its mojo back after having a bit of a setback this year. So I do expect international capital to continue to pour in and drive our rates lower, and our Fed will follow market rates lower.
And lastly, everybody needs that one big bang investment where they can throw in $100 and sell it for a couple of months later for $100,000. Can you please give us one of those stocks?
That's a little tough. It will probably be something that has a big earnings surprise. Last quarter it was Sezzle, SEZL. We'll see if they can pull it off again. It did consolidate here recently. What happened is Fannie Mae is changing how it evaluates credit, and it hit some of the credit-related companies like FICO. They're the ones that do your credit score. And Sezzle got hit in that sell-off just because it might be in some ETFs that deal with credit and stuff. So I think it's a good near-term buy, but I don't think you'll earn 1,000% in 2 months. Sorry about that.
Well, I'll be keeping an eye out on how it all plays out. Thank you all so much for watching and supporting us. Don't forget to like and comment your top earnings pick and subscribe for more market breakdowns every week. We'll see you next Sunday for a new video. Thanks so much, everyone.